FX Mesh here, smashing it. What is going on, guys? Guys, we are back to my channel. I will be just giving some few advice and that I believe is going to be beneficial to us. Now, many times around trading, we see trading as something that we would like to take advantage of to make profits, and when we engage in trading we encounter losses along the line and we get frustrated. We don't want to continue with what we have encountered. Based on what we have encountered, we don't want to continue because of the hardness and the stress and everything. I think the mentality with which you need to face trading is that of having a long-term plan, understanding what you need to do to get profitable. I would actually recommend that you just absorb as much as possible. Start with the basis, support and resistance, understanding trend lines, how to draw support and resistance, trend lines, identifying key levels. Then how does candlesticks form, stuff like that. Then candlestick patterns. Then just gradually like that. Then using Fibonacci tools to measure areas where price can react and trading opportunity areas. So stuff like that. Those fundamentals that will help you. Then now begin to understand into major price actions or those advanced level of trading, and you can now begin to build your concept, your ideas. Then along the line, you also while you are engaging in such things, fundamentals to your trading career, you can also start looking at how to take trades using paper trading, like maybe demo account, and have a feel of how the market behaves. Have a feel of what it looks like to lose and to win. Actually, most of the time, when you lose a trade, that is when you actually start learning. I'm telling the truth. When you start learning, your learning starts from losses. Your learning starts from losses. So it's very, very good to apply yourself, in trading. There's enough people that know how to trade. A lot of people know how to trade. The problem is executing that confidence. When you enter the market, are you scared of, is this thing going to go down to losses? And then how do you calculate your trading? How do you calculate your entries, your lot size and stuff like that? How do you calculate lot size? How do you calculate your leverage? How do you know what leverage you're using? All those kind of things. Then the psychological aspect as well is also very important. But many times I used to say that psychology is very, very important, but I've begun to discover that psychology is quite important. But once you have a strong trading plan, or let's say a strong trading strategy, the strategy, once you have practiced that strategy over time, you have that confidence that this particular time of trading, this particular session, US session or London session or Asian session, you look out for a particular plan, look for a particular behavior of the market that looks like what the trading plan you have set aside. Now, that is what I'm trying to say. I'll be going through just a few pairs today. I don't want to make this video long. I just want to just show you what I mean by what I've done, what I've learned lately this week, 27th of November to 1st of December 2023. I took a few trades and I'll be showing you what I was able to gather from it. Now, first of all, I posted it on my Telegram. I don't have too many people. I just have 26 members for now. This is where I post my trading activities. This is one of my Telegram where I post my trading activities, and I actually took EuroCard as one of my pairs, and actually I lost because I entered too early. I think it was Monday, and I actually saw what I was looking for, but I kind of entered too early and I stopped out. It stopped me out rather. Now I'll just show you something. Now the idea I want to show you is just basically something like this. Now, if you have, take for instance, you have a range like this, this range in between these two lines. Then you have price ranging inside. What I'll be paying attention to is that one, I'm looking for a purge. This is a purge. A purge is kind of like a fake out. So that's where the manipulation starts. Ordinarily, I used to trade, before now, I used to trade break and retest, which is still, I still use that as my concept. But I now discovered that due to the level of manipulation this year, they have, if I wait for a break and retest pattern, it will take me a long time to actually see trading opportunities. So I decided to pull back a little bit and started doing research on other trading strategies that might work for me. And in the course of studying different kind of techniques and ideas, I came across this ICT method and I borrowed some ideas from there to incorporate into my trading strategy and my plan. And it's actually started working. So I'll start from what I used to do. Normally I used to do break and retest. I wait for price to, if it's a bearish trend, I'll allow price to break past the key level, a major level. On a key level, when I mean the major level, it could be resistance or support on the higher time frame. So let's assume this is a 4 hours time frame. Price is coming down, it's on a bearish trend. Price break past the level. I will expect price to come back around that region to retest. It can retest here, it can retest here, it can retest around this area and start pushing to the downside with clear candlesticks. But have to, it will require me to actually be very, very patient, because it's going to take a lot of time for price to actually push to the downside because of the higher time frame. I have to wait longer days. And once I see opportunities here and I see a kind of a reaction around here, and I can see that price is not breaking to the upside, breaking this level to the upside, I will now scale down to a lower time frame and begin to look for selling opportunity, because it's already a bearish trend. That's what I was doing. And also for a bullish trend as well, the same thing happens where I'll allow price push to the upside, break past the level, come back to the test. When I start seeing candlesticks pushing to the upside, I will now scale down to a lower time frame to identify more trading opportunities in the bearish push. Now that is what I was actually doing, but this year I had to add some trading plan. Now I'll not take an entry here, something like this, and I'll take my stop loss just below the level. And the same thing happens for my bearish trend, where after scaling to a lower time frame around this area, as far as price don't break past this area upwards, I'll scale down to a lower time frame here and enter from this level, something like this, and I'll just take my TP to this point and my stop loss to maybe something just above the structure. That's what I've been doing. But I now discovered that I was waiting too long, because waiting for break and retest and also being stopped out many times. So what I did was that I incorporated some ideas from ICT. And what was these ideas? I began to identify liquidity sweep. When price starts to show some degree of manipulation, what I do is that I look to the left to see what exactly are the market makers trying to do. Now, what I've identified is that the market makers are trying to create a displacement, trying to actually take out liquidity. This is what happens once you see traders, sellers trying to take, or buyers trying to take a buy from a particular point of a support area. What market makers do is that they push the price below to stop out, to take out those traders' stop loss and push the price back into the range. So I'll show you what I mean. I'm not going to go too much into what the pairs I took. I took a number of pairs this week. Now this is what I mean. Just look at what I mean. You can see that between these two lines, this is a range, right? And price has been moving in this direction sidewards after breaking this level. Now it has been on a bearish push for quite a while and is now started ranging. So when price started to range, I discovered that, okay, if price is ranging, let me see what happens between these two areas I've identified. So look at here, you can see liquidity here, and I had to wait. And look what happened. This is a deliberate attempt by market makers to push price to stop out the buyers that are taking buys from here. So what they did was push the price down and take the price up. That is called liquidity. They take out liquidity sweep and take it up. So in other words, this is the idea. Once you see price dancing around the range like this, you see price dancing around the range, something like this, bounce, let's see some inducement, play around. Once you see price breaks out of this range, wait for price and see what price wants to do. If price begin to push back into the range, there you go. You will now start looking for how much is this displacement. This is called this one now is displacement. This is a displacement inside the range. The next thing you look for out is a break of structure. What is the structure? This is structure. It breaks out of the structure. Okay, this is structure. Then you find a fair value gap because of this sudden displacement into the range. Find a fair value gap here so that price can find 5 value gaps inside this displacement, and so that price can act as a magnet for one of them. Or maybe let's say this is fair value gap. It acts as a magnet, and you can now start looking for buying opportunity, because first of all, price has started pushing upwards. Then that will now become your buying opportunity. Your stop loss will be just under here, and your TP will be at this point here. And this was the idea I used in taking this particular trade, and see how it worked out. What do? Identify an area where I want to work. Identify this range. Once there's a range, look down. If it's a bullish bias, look down to spot liquidity. You can see where there's money here, another liquidity here, another liquidity here, and look what price did. Took out the liquidity, stopped out the buyers here. Their stop loss was around here. It stopped them out and pushed into range. And I found a fair value gap here, one here, another one here, and look what it did. Price just retested. Let me show you what I mean. Price came up, look how where it retested the fair value gap. It acted as a magnet. After breaking past it, it tested it, then started pushing to the upside to hit TP. So the same thing happens to, I took a couple of trades. Let me check. I think look at this one again. The same thing. Look at this one. Liquidity here. Liquidity here. Although this one there was not much. It wasn't. It didn't. The price didn't push downwards enough. But you can see that. You see what I mean? You must identify liquidity. There's liquidity here. There's liquidity here. There's money here. There's money here, and there's money. There's there's money here. So once price start pushing to the upside, you can see. Imagine if I'm taking this is a fair value gap here. If you look at it here properly, is it fair value gap? But I took my own from here. I took a very short trade here. Liquidity here, but it didn't take out this. But anyway, this liquidity here took out this liquidity here. Stopped out the market makers took out the buyers here. Those are buying from here and put their stop loss here. It took the liquidity out here. Then it started going to the upside. When I saw that price went up, retested this level, I could identify that there's going to be a trading opportunity. And you can see how price exploded to the upside and hit TP. I'm not going to bore you with so many trades I took, but this idea works. Always look out to the left, look for liquidity taken out by market makers, would call a purge, allow price to bounce into the range, creating a significant displacement, And once you see a displacement, there's always a fair value gap around that displacement. Allow price to come back to retest that fair value gap, and there should be a trading opportunity to the upside if you're taking a buy. And the same thing happens for a sell. So I'm going to end the video here. I'm not going to go further, but maybe in my subsequent videos I'm going to be explaining fair value gaps. I'll be explaining more of displacement. Right now I'm just studying more of liquidity, because I think liquidity is where one can actually make the most of trading opportunity. Also, displacement is very important. I look out for displacements and stuff like that. FX Mesh here, smashing it. Always remember to trust the process. I'll catch you in the next one. Peace out.